Let me also welcome Akshay Bhagwat on the show right now. Hi Akshay, good afternoon. Good to be speaking with you. Firstly, since there's no significant action on the benchmark indices, help us understand that which sectors you believe are now trying to make a comeback or are looking interesting at this point in time.
Good afternoon. It's the weekly expiry, and unfortunately, the indices are stuck around 24,800. It's the mid and the small cap sector where the action is, because clearly there is a lot of selling intent as we look at the screen, and most of the sectors are stocks are bleeding over 2 to 3%. There is a broader market sell-off, and really sector specific. If you were to choose which sector would kind of hold on to the kind of the sell-off which we are noting in the last 3 4 days. I think somewhere IT sector has some strength, although it is down today. But I believe stocks like a TCS and HCL Tech or a Tech Mahindra TCS, these are the big boys in the IT space. And eventually the thought is, looking at the broader technical setup, they may eventually find demand at the lower end of the support band where they trade. So I would be betting on IT names as a safe haven to park on the buy side in this current volatile or directionless conditions the way the markets have been.
Okay, that's the take coming in on the markets. But Kunal, you know what you flagged off earlier, the weakness in the broader market today is a little bit alarming. The Nifty is doing nothing, but that's not the case with the broader end of the market.
Yes, Aisha, I think that's the concern for the markets today, because there's one way to look at that maybe the indices are just about trading into a range. So this pain or this sell-off across the broader market, that could be absorbed pretty much very quickly whenever the markets show signs of recovery, because that's where the money would start to flow in. But the other way to look out for is that consistent weakness across the market breadth eventually causes the indices to also reverse its course of trend. So that, I think, is something to watch out for. It's just, I think, the first major day where we are seeing weakness across the mid caps and small caps over the last many weeks. We have seen the indices, mid cap 50 as well as the small cap indices breaking below their 3-day, 4-day swing lows. So that's the first point of concern which is emerging across the sectors. But then when I look at the components or the composition of the sectors, the mid caps and small caps, there are multiple stocks which have actually come into single digit RSIs on their hourly charts. That generally is an indicator that we may not see a very major kind of follow through move on the downside for many of the mid caps and small caps, which have already been falling over the last couple of days. So which all of that sum totals that we are looking at a potential that over the next couple of days the mid caps and small caps could bounce back, and the indices as usual could trade into a range.
Kunal, is there any theme within the broader end of the market which could actually lead, or for that matter, even with the large caps? Or do you think it's going to be more broad-based whenever the recovery happens?
So it starts off with, what happens, Aisha, is that whenever the markets go into a consolidation, it becomes more broad-based. Whenever the markets go into a direction, it's always been led by few sectors. Now, in the last, for example, 3-4 weeks, you had few odd days where the banking did well, financials did well, then you had realty which did well for a couple of days, and now you're looking at there was a phase where IT stocks also did pretty well a couple of days back, and then now you're looking at auto stocks starting to show signs of a breakout. Now, in a zone of consolidation, there is no major trending moves which we see into the index. I'll go back to the last 2-3 months when the move started off for the indices sub 22,000 mark. That was a point where the defense stocks, for example, the PSU theme, they started to outclass most of the other sectors. So that's the difference which is happening this time around. You're not seeing any major uptrend into sectors, individual sectors, and that's the major reasons why the indices are still trading into a range. As of now, there are still no major signs which are emerging that there are few sectors which are oversold, some of them are overbought. They're still at a neutral territory for many of the sectors, and that's why it becomes very difficult to call in that which are the sectors would actually go into the first leg of a revival whenever the markets have to go into a breakout mode.
All right, but a lot of stock-specific action indeed. And Kunal, I just wanted to have your take on one of the stocks that I believe you track closely, that is restaurant brand Asia. I'm not sure about the news flow, but this particular counter is seeing a surge of almost 9 to 10% in today's trading session. Give us some sense that how is the setup looking like, and is this move also supported by volumes?
Yeah, it's one of the best volumes the stock has seen over the last, I think, 1 year. Almost 2.5 crores, 2.35 crores volume on the NSE segment for Restaurants Brands Asia. The stock is nearing, or I think intraday there was a breach of 200-day moving average for the stock price, but it's corrected or ebbed off slightly from those intraday highs. That's maybe because of the overall market condition. But these are the kind of stocks which generally see some strong price volume uptick and then a follow through price up move. They are the stocks which generally see a follow through uptrend going forward over the next couple of days. So as I'm anticipating over the next 2 days, you might probably expect many of the mid caps and small caps to show a strong bounce back. I think in that light, you may expect stocks like RBA to also go into a further rally mode.
All right, that's about Restaurant Brand Asia. But within the consumption basket, Akshay, one stock that is showing a good uptick today, that is Tata Consumers. Just yesterday, the company did highlight how their FY25 performance has been, but nothing significant came out of that. And today, we are seeing the stock having an up move of almost 2%. What do you make of this particular move, and should one really trust this move and maybe take a position here?
Well, the initial sense looking at the price volume action is this is more of just a trading up move. The longer term or the medium term charts are still, showing more of a neutral setup with the stock broadly trading in a falling channel, 1200 being the upper end band and somewhere 900 being the support zone. So the bounce which we have seen in today's trading session comes at some vital moving averages, short term ones which are placed around 1060 zone, and the belief is that this carryover move can last till around 1100 to 1125 at the best. So it's more of a trading move, not to be taken and held from a medium term perspective as the current trading goes.
Okay, that's the take coming in on Tata Consumer right now. That's, of course, one of the big winners today. Auto as a trend, M&M, iShirt, those are two names which are also holding out very well. But we chatted with Hiren Vaid from Alchemy Capital Management earlier today, and here are some of the sectors that he's liking. He's talking about as to how the cap goods theme, some of the defense names, chemicals and pharma spaces that can still, yield good returns from even the current levels.
I still feel that, while valuations are expensive, but there is a structural growth in those, right? So whether it is asset managers, wealth managers, exchanges, I still feel that there is money to be made there. So to answer your question, would you still deploy fresh money? The answer is yes, okay. I would.
All right, but Mr. Vaid, let's also touch upon some of the sectors within the broader markets where companies have already delivered well and they're still looking forward to great growth numbers. One of the case I believe is EMS counters, where Indian companies rather have showed what they can do and what they are capable of course with the government support. And the other one is the quick commerce place, where we have seen a bit of a turnaround as well in select companies. Do you believe it's still reasonable at these price points where the valuations are already stretched, but still it is the case where you can pay more?
So I think I agree with you. I think EMS is a great growth opportunity still. I think we are in the early stages of a growth cycle, right? Probably with the exception of Dixon, which is just about going to reach 1 lakh crore of market cap, right? A sector which is so large and the opportunity which is so big. I think you will see the birth of many large companies there, right? And yes, the valuations are quite punchy, but you will have to therefore elongate your time horizon for investing. Having said that, I think we have to be careful because a lot of the growth is in the price and valuations, right? So unless you are really willing to bet for the next 3 to 5 years and wait for that growth to unfold, there could be intermittent quarters where the numbers may or may not pan out to be good, and you could have a very significant drawdown in these kind of names. But on a structural basis, I still believe there is money to be made. It's a young sector in India relatively.
What about e-commerce place?
On quick commerce, I think it's, we are at an interesting juncture where, you have 2 or 3 people jostling for the market, right? I think the players themselves are surprised at the kind of growth that we've seen in the quick commerce segment. I think that for some more time, the competitive intensity is going to be much higher. So again, while companies will achieve scale quickly, but whether they can achieve profitability quickly is yet to be seen. It's a large opportunity, and my sense is that in this, it will be the winner takes it all. So whoever is number one will probably get the disproportionate part of the valuations, and for the rest of the players, I think while they can be happy saying we do quick commerce, but there'll be no quick money to be made there.
Kind of reminds me of telecom, that the one with deep pockets, the one with the spending power is going to win the game.
Correct.
Yeah, absolutely. And just so much competition now, because everyone's realized that the pie can be shared.
Yes.
And, everyone from a Rapido to Amazon, and you keep hearing new names on a daily basis. So I don't think that, the prime position that Eternal had again, and I think the stock price is pretty much reflecting that.
Yeah.
It's
I
going to
think
be a while before it gets
people are
back,
waiting and watching to
yeah.
see who's going to come out trumps in this game.
Yeah.
And I guess you'll have to wait for a couple of quarters to get that answer,
Yeah.
right? Because everybody's fighting for that pie. So in the near term, it's anybody's guess.
Yeah.
Let everybody burn their money and then we will
and
see
then we'll
what
see
happens.
who's left. Yeah. But I want to get back to the sector that you were talking about earlier, pharma.
Yeah.
There is that big overhang on, Trump's tariffs there as well.
Yeah.
But, and of course, they keep propping up all those US FDA issues as well.
Yeah.
But where is it that you see opportunity within pharma? Stick to generics, go for the new fads, biologics, GLP-1, etc.?
So I think, broadly, again, pharma is very different. You
Of
have to be
course,
stock
yeah.
specific. But I'll tell you very interestingly, I was in the US, one of the sell side firms, they do a conference every year. And I thought let's go and, get some perspective.